Hi everyone, today's video is about the CP KCS bid, counter bid and the aftermath of it. So there is a lot of movements happening in the freight transportation industry. Yesterday, KCS has notified CP that it intends to terminate the CP deal to buy KCS, which was considered as a friendly merger. The reason for this is that KCS says revised CN bid is superior to CP agreement. So after terminating the deal with CP, KCS has entered into a definitive agreement with CN. However, as per the previous agreement, CP has 5 business days for negotiate the deal and probably come with a better offer. CN's revised proposal is a total enterprise value of $33.6 billion, offers KCS shareholders $325 per common share. That is, KCS shareholders will receive $200 in cash and 1.129 shares of CN common stock for each KCS common share. In case you are new to the whole story, I have created 2 videos on this topic before. One when CP announced the bid in March and the other when CN outbidded CP in April. I will paste the link in my description for both those videos. On hearing this news, this is what CN President has to say. We are delighted that KCS has deemed CN's binding proposal superior, recognizing the many compelling benefits of our combination and expressing confidence in CN's ability to obtain the necessary approvals and successfully close the transaction. CP reacted with the comment, "We believe that Canadian Pacific's negotiated agreement with Kansas City is the one true end-to-end Class 1 combination that is in the best interest of North American shippers and communities. CPKCS is a once-in-a-lifetime opportunity to not only protect all existing shippers but to inject new competition and capacity into North American transportation system." CN Rail said it is seeking approval from the Surface Transportation Board for a voting trust and trustee that is identical to the one approved by the regulators for CP's proposed acquisition. So what happens next? Is the deal done? Has CN won the biggest transaction of the rail industry? Not yet. There is more to come. And the proof for that is the latest news that came in yesterday evening. US Justice Department came out against Canadian National Railway's use of a voting trust in its rival offer that the US Rail has deemed superior. So the saga is going to continue for days to come. Let's look at the sequence of events that has led to this. On March 20th, CP bids to buy KCS for a $25 billion deal. Both the railroads came out public with this news, so it was considered more as a friendly merger. April 20th, CN outbid CP with a $33.7 billion. May 6th, US STB approves the voting trust for Canadian Pacific's proposed acquisition of KCS. US STB granted a waiver to CP's $25 billion agreed bid for Kansas City Southern, which means the deal would not be subjected to the tougher railroad merger rules that regulators have put in place in 2001. What is this 2001 merger rules? We will have a look at that shortly. May 14th, KCS terminates the CP deal and agrees in favor of CN deal. On June 2001, federal regulators released new rules that would make it more difficult for the North American Class 1 railroads to merge. Requiring them to prove such deals will increase competition for rail customers and deal with service problems that have created major problems during the past mergers. The Surface Transportation Board oversees the rail mergers, will make sure that future merger partners will be required to bear a heavier burden to show that a major rail combination is consistent with the public interest. Specifically, the railroads will have to reach an agreement that increases the competitive choice for more of the customers, and will have to provide firmer proof that customers will not suffer from service problems from the mergers. This is to avoid a monopoly in the business, as freight rail transportation is considered as an essential service. The new tougher rules specifically exclude KCS in recognition of how much smaller it is than the other major railroads included in the rules. And so far, that is what happened. The STB on Friday, May 6th, said it will review CP's possible application to take over KCS under rules that they treat KCS differently from other large US railways. Given KCS smaller size, the STB rules on takeovers waive the requirement that a takeover of KCS be in public interest and pro-competitive. The STB said it will continue to apply this waiver should the takeover proceed. What is the next for each of these parties? CN Rail. As it stands, KCS have already agreed to the CN deal. So in order to make this deal happen, they now have to get approval from STB for a voting trust. They also have to make sure that they receive most of the support from shippers, truckers, communities, and other boards. There may be objections, but the aim would be to get more support than objections. The deal between KCS and CP was that if KCS withdrew from the deal, then they have to pay 700 million breakup fee to CP Rail. Canadian National has offered to cover this 700 million breakup fee. CN will also pay Kansas City Southern 1 billion if the US Surface Transportation Board rejects a voting trust structure it has put forward to complete the deal. So if the deal happens, then CN have to pay 700 million to CP, and if STB doesn't approve the merger and KCS doesn't get a deal from both CP and CN, then they have to pay 1 billion to KCS and the earlier said 700 million to CP. Now let's see where CP Rail stands. It has 5 business days to outbid CN or do some negotiations with KCS to bring them back to the deal. But CEO of CP, Mr. Creel, has previously said that they will not be entertaining a bidding war. But we never know, as so much work has already been invested into this, and they wouldn't want this deal to go to the biggest rivals. If the deal doesn't happen, they can walk away with 700 million from CN. So from an investor perspective, on short term, money stays in the company and they also get an extra 700 million. But on a long term, it's a missed glorious chance. But important thing to note here is that if KCS-CN deal happens, then CP would become the smallest Class 1 railroad of North America. So in order to survive the market, will we see another merger? Maybe a NS-CP merger perhaps? You never know. What about KCS? If the deal happens, either with CP or with CN, they will be taken over by another company. So no longer an independent company. But from a shareholder perspective, a huge premium to the share price and a chance to be part of a bigger company. If CN KCS deal goes through, the KCS share will be of a 45% premium to KCS closing share price as of March 19, 2021. So there is a huge possibility that if both the bids failed, then the stock will plunge. So from KCS perspective, if STB rejects the CN KCS approval, then they may have to go back to CP. Now, if you look at the stock market, all the three are traded in NYSE, whereas KCS is not registered in TSX. CN Rail stocks trades as CNR at TSX and CNI at NYSE. The price is 130.07 CAD at TSX and a US dollar of 107.33 at NYSE. They have been consistently going down for the last 1 month after the bid news has came out. On the other hand, CP did the share split of 5 to 1 and it came to effect yesterday. Before the split, the price was between 480 to 487 range at TSX, and currently with split, it stays at 97.01 CAD at TSX and $79.91 at NYSE. The bigger gainers, KCS, trades as KSU at NYSE, are at $309.01. After the news on Friday, they fell about 1.5%, but they have had huge increase after the CP bid. On December 31st, 2020, they have been trading at $204.13 and at $224.16 on March 19th before the CP bid. So on an overall, I don't think this is the end of this saga. There is more to it. So let's sit tight and enjoy the show.